Bitcoin. It was created in the shadows and aftermath of the 2008 financial collapse. An anonymous being, Satoshi Nakamoto, was fed up with governments abusing monetary policy to benefit the central bankers and the rich elite. Bitcoin was made to save world civilizations from a future fiat collapse. Is Satoshi's ultimate plan still in motion? We'll find out in about 10 minutes because it's time for Chico Crypto. Yeah, Satoshi created Bitcoin out of distrust for governments and central bankers across the globe. Hidden in the first Bitcoin block, which was mined January 3rd, 2009, was this message. The Times, 03, January 2009. Chancellor on brink of second bailout for banks. This was referencing the front page of the Times newspaper for that day, which had the subheading, "Billions may be needed as lending squeeze tightens." Just a month later, after that Genesis block, Satoshi explained his distrust with his first Bitcoin post explaining the concept on the P2P Foundation forums. Satoshi said, "The root problems with conventional currency is all the trust that's required to make it work. The central bank must be trusted not to debase the currency, but the history of fiat currencies is full of breaches of that trust. Banks must be trusted to hold our money and transfer it electronically, but they lend it out in waves of credit bubbles with barely a fraction in reserve. We have to trust them with our privacy, trust them not to let identity thieves drain our accounts. Their massive overhead costs make micropayments impossible." This was said by Satoshi in February of 2009, and it was almost like he knew the future. The central bank must be trusted not to debase the currency, but the history of fiat currencies is full of breaches of that trust. Yes, in the decade to come, that trust was thrown out the window as central banks and governments conducted dollar-denominated debasement on a level never seen before. The money printers have been put into overdrive as the largest monetary expansion in history has been driven by the financial elite. Checking out the M1 money supply of the United States, we can see from early 2009 to March of 2020, the growth went from 1.5 trillion to 4 trillion. Then, because of the Rona, this jumped to 16 trillion in a matter of months. And in the 2 years since, it hasn't stopped. The M1 money supply is over $20 trillion today. And the same story relates to the M2 money supply stock. From early 2009 to March of 2020, the M2 basically doubled from 8.3 trillion to 15.4 trillion. Then because of the Rona, it jumped to 18.4 trillion in a couple of months. And in the 2 years since, M2 is now above 21.7 trillion. Yeah, obviously the money printers have run wild. So has this debased the US dollar? Well, first, what is currency debasement? Well, the origin of the term currency debasement comes from the age-old practice of governments, or back then kingdoms, subtly reducing the precious metal content of their currencies. For example, a king could start issuing gold coins of 80% purity, with the other 20% in a cheap metal like copper, instead of the previously issued 100% gold coins. Each coin would still be worth the same terms and face value, but because the gold content was lower, suddenly the king could issue 25% more coins than he could have previously. The extra currency could be injected into the economy, increasing its growth. Of course, you couldn't overdo it though. Governments that took the gold or silver content of their coinage down to something like 10% were met with massive protests or even violent rebellions. Debasement needs to be subtle, otherwise it gets recognized for what it truly is: blatant robbery. So what is this blatant robbery in modern times? Well, inflation serves the same purpose as debasement. At the end of the day, inflation and debasement produce the same result. Your money is worth less in that it buys fewer goods and services than it did a few years ago. So now, let's just hear what head central banker, Federal Reserve Chairman Jerome Powell had to say about inflation and the money supply in February of 2021, before inflation started to really take off in the United States.
What is a store of value? The US dollar really, is it diluted as a store of value when M2 goes up by more than 25% in 1 year? Does the printing of more US dollars somehow diminish the value of the dollars that others hold?
You know, there was a time when monetary aggregates were important determinants of inflation, and that has not been the case for a long time. So you'll see, if you look back, the correlation between movements in different aggregates, you mentioned M2, and inflation is just very, very low. And you see that now, where inflation is at 1.4% for this year.
The money supply, the printing of currency, does not have any effect on inflation. How wrong was he? As the currency debasement, aka inflation of US dollars, is going beyond anything seen in decades. Just the month after Powell said that statement, inflation jumped above the target of 2% in March of 2021. It rapidly increased to above 5% throughout the summer of 2021. Then in October, it jumped above 6%, and then rapidly grew once again, reaching 8.5% by March of 2022. Was the US government so blind they couldn't see inflation coming? No, my friends. They knew it was coming. It was part of their plan all along. Just like the money supply explosion, since 2009, US debt has been exploding too. From about 10 trillion in 2009 to about 23.5 trillion by March of 2020, aka when the Rona took over. Within 2 years since then, it has grown by another 7 trillion, and as of early 2022, US debt reached over $30 trillion for the very first time. To understand how large this is, the 30 trillion national debt of the United States is the value of the economies of China, Japan, Germany, and the UK combined. Now, guess how much the US is paying on interest on this debt per day? Over $900 million, almost $1 billion every single day. Now, if you didn't know, inflation hurts the savers, the regular Joe or Jill, as it eats away at their money. But it helps the borrowers as it eats away at their debt burdens. And obviously, from US debt data, the United States government is the biggest borrower in the world. Now look at this. Since early 2022, the national debt has been whittling down. This Axios article posted April of this year shows just that. Inflation is whittling down the national debt. An article states, America has inflated away $2.7 trillion of its national debt in the 14 months since President Biden took office. When Biden took office, the national debt stood at $27.8 trillion as measured in January 2021 dollars. The national debt today, measured in the same dollars, is $27.7 trillion, a decline of $79 billion. The reason for this? Inflation of US dollars. The article then ends with this. The bottom line, inflation is bad for savers, which means it's good for borrowers. And there's no bigger borrower than the US government. Now, in my opinion, the US government was in trouble from a decade of rampant borrowing. They were soon not going to be able to make the interest payments on their debt. So the money printers went into overdrive, which they knew would cause inflation and hurt average Americans, but it would lessen their own debt burdens and help keep them afloat as a world superpower. But for how long? Well, the long-term consequence of inflation is that US debt and the dollar is not going to be trusted as much as it has been in the past. As we can see, the share of global reserve currency held in US dollars has been dropping and dropping since 2014, from 66% to just above 58% today. Other countries across the globe are putting their reserves in other alternative currencies, signaling they don't have faith in US dollars. And even though I hate this guy, Peter Schiff, he does have a point with this tweet posted just last week. He said, "Not only is the US dollar weakening against a broad basket of foreign currencies today, with the US dollar index dropping by 1%, but it is crashing 6% against the Russian ruble. The dollar is about to begin a historic bear market, with a soaring ruble leading to the collapse." Well, actually, Peter, it may begin with other currencies like the ruble, but in my opinion, it eventually will be a soaring Bitcoin leading to the collapse. This Satoshi Fox article explains my point very well. It's titled "Valuing Bitcoin Using US Dollar Index." And the article states, "Of the dozen indicators and metrics we have researched, the fortunes of the US trade weighted US dollar index has the biggest impact on Bitcoin USD prices. When the TWDI depreciates, aka the dollar weakens, this boosts Bitcoin prices strongly. When the TWDI becomes stronger, aka the dollar strengthens, Bitcoin prices face significant headwinds." The TWDI is a weekly index created by the US Federal Reserve to measure value of the US dollar based on its competitiveness versus US trading partners. The regression chart above shows that as the TWDI depreciates over a 48-week period, dollar becoming weaker, then the trend is for Bitcoin priced in dollars to rise strongly over the same 48 weeks. When the TWDI appreciates, dollar becoming stronger, then the trend is for Bitcoin priced in dollars to rise much more slowly over 48 weeks. Interestingly, periods of negative BTC USD growth over 48-week periods are not only uncommon, but also relatively mild. Additionally, 48-week losses in Bitcoin have only ever been accompanied by a strengthening dollar. When the dollar is weakening, Bitcoin has never experienced negative 48-week growth. A weakening dollar is good for Bitcoin, and a collapse of the USD as the global reserve currency is coming. Satoshi's plan is still fully in motion. Cheers, viewers. I'll see you next time.